It's time for the Your Personal Bank Show with Ferenc Toth, president and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show, and we've got a lot of stuff to cover today. Obviously, the big news that's been going on is, reopening the economies. Different states are doing that. How is that going to impact your money? The economy, markets, all those kinds of things, business. We're going to talk about all those things today. So we got a lot of great stuff to cover. So I'm going to say, buckle your seatbelt and let's go. So, of course, like I said, the big news right now, obviously, is, different states are starting to reopen. Some have already, at least partially. And there's been, a lot of controversy in terms of, when or how these different states should operate or how they should open. It's going to be an interesting experiment to watch, particularly some of the earlier open ones that earlier, and see what how things go. First of all, is it going to, are we going to have a re-flare up, if you will, of the virus? Are we going to have an increase in cases as a result? Are people going to go out and actually, start doing business again and living their lives like they used to? I think a certain percentage will, of course. But what's interesting to me, I think a certain percentage won't. And that's what the interesting part is. What is that going to look like? And I think regionally it's going to be different. As I've shared with many of you, if you've listened to the show before, I've got a lot of clients all over the country, lots of business owners, professionals, investors. Those are the type of people I deal with. Yes, I have some very wealthy clients, no question, some extremely wealthy clients. And I have a lot of folks that are just, I guess you would call average Americans. Just the regular middle America folks, or middle class folks, I should say. And there's different perceptions I've noticed when I'm talking to a client in Seattle or a business owner versus, if I'm talking to somebody more in the Midwest, California, New York. I've got clients literally I've spoke to in the last several weeks, from, Seattle, New York, Florida, California, and everywhere in between. And it's kind of interesting to see and observe some of the regional differences that are out there in the perception of what's going on. I think there's little doubt that there's extra cases that have occurred, in more, let's say, more urban areas or more densely populated areas. It seems to have affected those areas more than the less populated areas, densely populated. And I don't know if that's from how, amount of testing there is, or if it's just that's par for the course, if you know what I mean. There's a lot of maybe reasons behind it, but death tolls are kind of hard to hide and change. One of the things I was just talking to my producer about this literally a few minutes ago, and I've been talking to a lot of folks over the last several weeks, is I know when it comes to media that, let's face it, bad news sells. Bad news gets people's attention, and extremist, either good or bad, gets people's attention. And I know this is counterproductive, I guess, in a way, but what I'm trying to do is try to walk a middle line. I've been in business, and again, I've owned several different businesses. I've been in the financial arena, own an agency for the last, own the agency 16 years, 22 years in the financial world. Entrepreneur over 25 years, several different businesses. And what I've come to learn and find about a lot of these kinds of things is somewhere in the middle. The extreme positions typically is not what's accurate. And I find it frustrating because some of these folks are even friends of mine. And they'll talk to me about, their perception of what's going on. Should we shut down? How bad is it? And all that. And I get a little frustrated, I guess, with the extremist positions. I do get frustrated when somebody said just, I think it's discounting. It's just the flu. It is. And most people aren't going to die from it. And most people aren't going to get symptoms from it. I think those are all true. But again, it's something that we've never faced. So there's some fear involved there. And people don't know how it's going to impact them if they get it. And certainly if you're older or you have underlying health issues, this is something that's serious. So, by the way, so is the flu. Okay. And then the other side of the coin, the fear mongering. One of the things I don't like is I saw something just last week where it was I think it was the assistant health, one of the top health people in the U.S. I can't remember the name, but talked about how they were counting COVID deaths. And one of the things she stated, I think, she was assistant health secretary, stated that, if somebody dies and, they could have been a hospice. She used the example. They could be on hospice and, they got 2 weeks to live expected, and then they happen to get test positive for COVID. They're counting it as a COVID death, even though the cause of death really wasn't COVID. It was something else. They happened to get it. So that's misleading and frustrating, in my opinion. So it's hard to get a handle sometimes because there's agendas involved with all of this, of course. But somewhere in the middle is probably where the truth lies, if you know what I mean. And why is that so important? Well, it really comes down to, if you're thinking about your money, gosh, this is Money Radio, how is that going to impact your money, your retirement, your investments, your future, your income, all those kinds of things, right? And to get a handle and not to be too high, not be too low, I think is pretty important. Last week's interview with John Burley, if you didn't listen to it, I'd highly encourage you to. It was 428. John Burley is one of the top real estate experts in the country, and he talked a lot about this. I asked him a lot of questions. The entire show is asking him about what he thought about real estate and how the current economic situation is affecting it. And I highly encourage you to go back to that. You can go to yourpersonalbank.com and listen to that or any of the previous shows. But what I want to talk about today is, like I said, reopening and how's this going to affect us short, medium, long term. And, of course, the reality is nobody really knows. And there's a lot of uncertainty involved. And uncertainty is what creates volatility, which creates problems in terms of making decisions and what to do and various things. So what do you do? Well, the first thing, I think the word of the day I'm going to say is this, is the word is going to be caution. And I say this because, again, with the level of uncertainty, I mean, let's face it, nobody really alive remembers the last major pandemic we dealt with. It was in 1918. And, of course, our economy and everything else is a lot different than it was 100 or so years ago. So how is this going to impact us, short term and longer term? And it's too early to tell. Every projection I see, everything I read, economists and all that say, one of the things they all say, well, they predict this or they expect that, but then a lot of them have a caveat where they say, but these numbers or this situation could be wildly different because we're just not really sure. Okay? So I think having a healthy caution is wise today. I wouldn't jump into things too strongly at this point if I were you. That's my opinion, because there's so much uncertainty going on out there. I mean, let's talk about, the current stuff. We talked about an interview also with Local First AZ. They're giving out small business grants to the local businesses that have been overlooked by the government loans. And sadly, like an article I just read here, it's public companies took far more small business loans than first thought. And they've got the tallies of how much, some of these larger publicly traded businesses took from the Paycheck Protection Program loans and various things, which, takes away from smaller mom and pop type businesses. It's frustrating because certainly a larger publicly traded company typically has more financial resources and whatnot, but not always, but typically they would. And I guess, like I said, there's a conundrum. There's some people that are up in arms about it, and then there's others that are like, well, we get it. And like I said, as an entrepreneur, as a business owner, if you're the CEO of a company, your job is to, make your company successful. You're dealing with an unprecedented pandemic if you're a restaurant business, for example, where you've been shut down, and then the government offers basically grant money. What do you do? Well, you're probably going to go for it. Now, of course, it's caused a public uproar, and some of the companies, to their credit, have refunded or plan to refund that money, but many have not. And we're going to see what happens. They reopened it. There's more money available. Some of those folks are going to get overlooked. They're not going to get qualified or whatever, or the money's going to run out again. I mean, it was like trying to get concert tickets it's like trying to get tickets to the Super Bowl, I mean, the first round, some of the banks talked about and I've talked to some of the lenders personally, I know some of these areas, where they said the money, the money ran out literally in a matter of minutes in some cases, or hours. It was amazing. So my point is, we're going to talk about what to do, how to exercise caution, and navigate this financial situation that we're going through. And I've got some interesting information on the next segment talking about things like unemployment And then another great article where it says, is it safe to invest in a recession? Stay tuned to Your Personal Bank Show.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com.
I want to invite you to an exclusive webinar that I'm presenting, updating the current economic situation and how it affects your money. What are the short term? What's going to happen short term? What's going to happen longer term? These are questions that are difficult to ask, but I'm going to do the best I can to give you some solid information to make the most intelligent decisions. Go to yourpersonalbank.com and you can download the free link to the webinar on the current economic situation. Again, that's yourpersonalbank.com.
Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. And like I said, we're talking about a lot of stuff in terms of reopening. How is that going to affect your money, your investments, your future, your income, all that kind of stuff? A lot of stuff's going on. There's a lot of a lot of noise. And so, and what that's doing is creates a lot of uncertainty. Uncertainty tends to create volatility. And volatility is something that is generally not great for investing and whatnot going forward. And so what I would recommend, here's the word of the day, I shared this in the first segment, is caution. And I would recommend exercising a healthy case of caution, because there's a lot of things that are uncertain, a lot of predictions that are going on out there by some top folks and that would really know. But so many of them say, well, we expect this and whatnot, but we're not really sure what's going to happen because this is such a unique cause. Pandemics don't happen very often. But I've got another article coming up that's going to talk about that a little further. But what I want to touch on first is just keep things in mind. Of course, the government's reopened some loan programs, added some additional monies to it. A lot of folks got left out. A lot of big companies got some of the money, and frankly, many people feel they shouldn't have. Some agreed to give it back, which is, I think, admirable of them. But again, they're trying to save their business through a tremendously, generational type of event. So I can understand why if the government say, hey, we're going to offer you some grant money, we're going to take it. So I can't fault them too strongly for that type of thing. Hopefully the people that need the money, the businesses that need it, get it. But unfortunately, I think it's pretty obvious that there's going to be small businesses that are going to be left in the dust. And that's why I've shared, I'm going to have him on again next week, Thomas Barr with Local First AZ. They have a grant program. They're basically offering small business grants to those businesses that get left behind for the government program. So encourage you, go to localfirstaz.com, support the effort, and let's help our local small business. But in terms of your money, how is things going to go? Let's look a little bit shorter term first. I saw an article here just recently, just came out, where it says fewer than half of U.S. workers in May will have a paycheck. This is from Business Insider. James Knightley, he's the chief international economist at ING. And, of course, some working age adults don't work for various reasons. But if less than half of working age Americans are going to be earning a wage in May. Job losses have been tremendous. Over 25 million in the first 5 weeks alone. And that's going to affect slumps, as he put it. James Knightley says, slumps in consumer spending, which, consumption makes up about 70% of our GDP. So the effects on the economy, as he states, will be severe. And, of course, there's going to call for, reopening the economy, and reopening too soon, lessens the chance the U.S. will see a swift recovery. That's his prediction. So things are going to be rocky. It's going to be fits and starts. There's going to be different regions going to start opening at different stages. It's going to be interesting to watch and see how all this plays out. But again, a lot of uncertainty. So again, caution, I think, is the word. Another article that I thought was excellent. This is really, really key, because I have a lot of people saying to me, so, well, should I put my toe in the back in the water? We hear buy on the dips. We hear all these things. And I'm not just talking about the stock market. I'm talking about, real estate. Like we had the interview with John Burley last week. Go back to yourpersonalbank.com and check it out on 428. An excellent interview on current economic situations with real estate. could be any market, really. A lot of stuff, a lot of the growth assets are getting affected by this financial situation. And here was their statement. This is from Motley Fool, and I thought it was very interesting, where it says, basically the title of this article is it safe to invest during a recession? And by the way, some of these articles that I think are really poignant, cut through the noise, if you will, because there's a lot of noise out there right now, folks. We'll post on our website, yourpersonalbank.com, so you can check it out, download it, pass it on to others, whatever. The point I'm trying to get is I'm not trying to raise a ruckus here and be sensationalist. I know that tends to get attention in the media. My goal here is different. It's really to try to cut through the noise and get to some really solid information so that you can make intelligent decisions about your money and your future. And that's my goal here. That's just what it's about. But this article I thought was excellent. Is it safe to invest in a during a recession? And they point out you can do so given it can be a great opportunity, as it states, under the right circumstances. And they point out 3 key circumstances that I thought were very, very powerful and very important. And the first one they listed is you need to have plenty of emergency savings. In previous shows, I've talked about the 3-bucket principle. It's a great way, and I know many of you use it. This has been around for a long time. This is nothing new on how to manage your money. You've got your emergency bucket. That's most folks talk about 6 to 12 months of emergency funds just in case for things like emergencies, obviously. You've got your middle bucket, which your income, interest earning type bucket. Frankly, your personal bank, it can be a bond equivalent. It has a guaranteed interest rate, has some guarantees involved. There's some safety involved as a result. Okay, you can grow your money consistently, steadily on a regular basis, which is the goal of that middle bucket. And your third bucket, of course, is your growth bucket. Those are assets that are you want them to grow. Things like most people come to mind, equities, businesses, some real estate investments, like fix and flips and various things like that. Those are the things that are designed to grow. Of course, in recessions, those are typically the most at risk in terms, and you can't count on the growth during a downturn time. You need to lean more on your consistent, steady Eddie, safer assets. Okay. So as I said, if you got plenty of emergency savings and you can live off of this and you're sure, and like I said, some of those emergency savings can be your personal bank. Nobody said it has to be in a savings or checking account earning next to nothing. You can earn some decent interest rates these days. Personal bank, like I said, currently crediting 5%, tax favored with some guarantees built in. That's not bad these days. Certainly worth considering. I'll put it that way. And a lot of people are doing that more and more, as you can well imagine. Anyway, my point is, you've got those emergency savings. You can survive a down cycle. You're good to go. Second thing is, you're not planning to touch your portfolio for at least 7 years. I thought that was interesting. Investing during a recession isn't for the faint of heart. There could be a lot of roller coaster volatility, if you will, ahead of us before things settle out. It's hard to say. There's no way to know, but you got to be prepared. Like I said, you got to take that long-term approach and don't plan on touching it for at least 7 years. I thought that was very astute advice. We hear that all the time. Set it, forget it, things like that. And that's very true, particularly now. The third one is you're not going to check your portfolio obsessively. I thought that was good too, because again, we've seen in the last couple of months some tremendous volatility, and the reality is that if you're not going to handle that volatility or that bothers you, well, gosh, this isn't the time, So, like they're saying in the article, so think in terms of safer, steady Eddie. There's nothing wrong with that. If you don't want to emotionally handle that roller coaster, that volatility that could indeed be ahead of us still, nothing wrong with going to the safer option, get some steady, consistent growth, all that kind of stuff. Like I said, contact us at yourpersonalbank.com. We can show you some really nice options in that regard to help you get through this time of, well, like I said, where I think it's wise for many people to exercise caution. And I think the analogy I'm going to share with this, I'm going to go into in the next segment that I think will really, really key in or tie into what I'm talking about is in terms of exercising caution. And a good reason why, because I have a white paper from the Federal Reserve of San Francisco, and it's talking about longer term or longer run economic consequences of pandemics. This is a very interesting read. Again, it's a 17-pager. Most people won't do it, but we'll post it on our website or the link to it so you can go to it at yourpersonalbank.com. I'm going to summarize this and share with you some of the longer-term anticipated things that are going to happen as a result of this coronavirus. What are the economic impacts we should be looking at in the longer term? Certainly, caution should be exercised in the shorter term. What about the longer term? Stay tuned.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show. We've been covering a lot of great stuff today. I've been talking about the small business loans, the economy, the shorter term. We've been talking about in the last couple segments. If you missed it, go back to yourpersonalbank.com. All our previously recorded shows are there. You can listen to them anytime. What we're going to focus on now is what about the longer term? Let me thought a couple quick thoughts about now, and then we're going to jump to the little bit longer, medium, longer term. Analogy I like to say is, and the word of the day is, I've been sharing already in the previous two segments, is caution. And those of you, even if you're not a NASCAR fan, if you're not a race fan, most people know enough about racing that there's a checkered flag, you win. There's a caution flag when there's been an accident. And, of course, green flag means you can go. And I would say right now where we're at with our economy and the situation we're in with coronavirus and everything else, I think a good analogy is right now we're under what's called the caution flag. In other words, you can go out, you can do some things, but exercise some caution. Be smart about it in terms of your money, investing, those kinds of things. I don't think it's time for most people to go big or go home right now. I think exercising caution under that caution flag, you can go, but don't go full out, makes a lot of sense. And why I'm saying that is there's an awful lot of uncertainty right now in terms of what's going to happen. Are we through this thing yet? How far along are we? Are we going to have flare-ups? Are we going to have other things, economic situations? What about the high unemployment we had? Is that going to recover? Are a lot of the businesses that have been shut down, are many of them going to come back? I was talking to a business owner last week, literally, and he owns a hair salon business, a sizable one, second generation, and been shut down, of course. And he said to me last week, and they're talking about reopening in his state, and he says, Ference, I don't know if I'm going to be able to reopen. And he's not the only one. He's by far not the only business owner I've talked to who have legitimate concerns about are they going to be back. I feel it's pretty certain there's going to be a percentage of businesses that won't come back. What is that going to be? What percentage is that going to be? And right now we don't know. And of course, majority of jobs in America, people work for small business, so those jobs won't come back. What do they do? Where do they go? So there's some longer term impacts for all this. If you're younger in your 20s or 30s and you want to go for it and go big or go home, or you're a billionaire and it doesn't matter, you want to take a flyer, okay. But I think for the majority of us, that isn't probably the best course of action. And that's why, again, having that middle bucket, I talk about the three buckets all the time, the emergency bucket, the interest income bucket, and the growth bucket, having your middle bucket, that interest cash flow bucket, sizable to get you through these kinds of periods is wise. And, modern portfolio theory talks about a rule of thumb is 60-40, 60% growth assets, 40% in that steadier cash flow assets, if you will. And the personal bank fits into that very, very well as one of those cash flow type assets, has some guarantees, has some tax benefits. It fits that bucket extremely well. And a portion of your emergency bucket can be applied there too. My point is, if you're nearing retirement, modern portfolio theory, again, recommends 50-50. Historically, the numbers have shown that works. I've got article after article, study after study that have shown that balance works. Getting out of balance is when people get in trouble. This current economic situation has shown some of those things, that risk where somebody was out of whack, too much risk, nearing retirement or nearing a need for those dollars. And then, of course, those dollars being affected, those growth dollars. Having the balance is key. And that brings me to one other point. This interview I did last week on 428 with John Burley. He's one of the top real estate experts in the country. He's an early mentor to Robert Kiyosaki, Rich Dad, Poor Dad. He's a best-selling author. He works with a lot of very, very wealthy people. And he's written in his book, he talks about, and he really stressed it in his interview. And I thought it was great. He said, the number one wealth key, and even went back, look, folks, this is number one. And a lot of people listening to this, of course, are doing it right. And if you're not, I'm going to encourage you to start following this. Like he said, nearly every person he's ever worked with or known who is truly wealthy. And I can echo that sentiment. I've worked with a lot of folks financially over the last 22 plus years, starting my 23rd year, actually. And I can echo his statement was, the wealth is generated by most people, vast, vast majority, by putting a portion of their income away on a regular basis, on a monthly basis. And it's a difference in mindset by putting it away and getting it locked in so it'll grow, not necessarily putting it at risk so it can go up and down, go big or go home kind of attitude. Putting it in something that'll steadily grow is the basis for developing wealth for the vast majority of people. I can tell you that from a personal experience, looking at financial statements, looking at tax returns. I always say it's kind of hard to lie to me about your financial situation when I'm looking at all that information, that documentation. And I can tell you that is the difference. It's also a mindset. It's kind of like some people talk about, getting out of debt, paying off debt and snowballing the debt and those kinds of things, which is also smart things to do. It's the process of actually going through it and doing it that creates that mindset and creates that ability to grow wealth. And the personal bank, again, I keep going back to it. This is the Personal Bank Show for one reason, and we do other things. We do other financial tools, don't get me wrong, but I find far too few people that I deal with and run into are applying this principle, and the personal bank is perfectly suited for that type of thing where you can put portion of your income away on a regular, consistent basis and let it grow consistently with some guarantees so you know it's going to be there. And what ends up happening is you start to build a nest egg, which then allows you to take advantage of opportunities when they come, which certainly with this economic situation, we expect some opportunities to come down the road, or take emergencies when they rear their ugly head, which we've, of course, seen a lot of that recently. My point is that is one of the number one keys to wealth. If there's one thing you get from this show today is if you're not already, I would encourage you strongly to start putting a portion of your money away on income on a regular basis, and not into something that's growth related, something that can grow consistently and generate cash flow. Because that is the basis for building wealth for the vast majority of people, like I said, that I've worked with, okay? Again, consider your personal bank as an option. If you haven't before, please, I encourage you to do so. If you have, relook at the numbers. A lot of things have changed. There's been a lot of updates and improvements. Contact us at yourpersonalbank.com. We'll be happy to go through that with you and share with you how it can benefit you, okay? It's not for everyone. I'm not going to say that right off the bat. But again, the majority of the people, the vast majority of the people that I talk to and meet with don't have that balance and don't have that methodology, that consistency. And again, that has been the key I've seen to wealth for the vast majority of people I've worked with. As I was starting to say, I was going to get into the longer term. Well, that's part of the longer term. The part of the longer term is developing that consistency, that habit, okay, and maintaining that habit throughout your lifetime to build that wealth. Compound interest comes into play then. Compounding in your second and third and fourth decade after you start becomes amazing. It's that consistency, that long-term steady consistency that makes the difference, again, in the vast majority of cases. So what I'm going to do is I've got a couple other thoughts. I got one more article I really want to share from the Federal Reserve, and it's about the longer-term effects of pandemics. and thinking about what is the longer term going to look like going forward. This is a hard question to answer because, again, there's so much uncertainty, and uncertainty creates volatility and caution. I would exercise caution, like I did mention with that race flag, the caution flag right now is probably the wise course of action for most people because of the uncertainty. Look, like I said, if you're a billionaire in your 20s or 30s, you want to go big and go home, okay. But for the vast majority of us, that's probably not the best option. So stay tuned in the last segment. I'm going to talk about the longer term effects and what the Federal Reserve is thinking about those. Don't miss it.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com.
I want to invite you to an exclusive webinar that I'm presenting, updating the current economic situation and how it affects your money. What are the short term? What's going to happen short term? What's going to happen longer term? These are questions that are difficult to ask, but I'm going to do the best I can to give you some solid information to make the most intelligent decisions. Go to yourpersonalbank.com and you can download the free link to the webinar on the current economic situation. Again, that's yourpersonalbank.com.
Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Okay, we're rounding third, and this is the Your Personal Bank Show. We've talked a lot about the economic impacts of, reopening the economy, what a lot of people think is going to happen. And again, the word of the day, there's a lot of uncertainty. So the word of the day really is caution. Encourage most people to exercise a healthy dose of caution right now until the dust settles and this all we determine where we're going to be at, what's going on, because a lot can happen, a lot could go right, and a lot could go wrong, and it's just, again, too early to tell. Great little article that from Motley Fool I found. It says, is it safe I get this question all the time, is it safe to invest in a recession? I love this. It's very simple. They said there's three things. It can be, but you got to have these three things in place. You have to have plenty of emergency savings. No, you're not going to need, you can get through an extended period of time. You're not planning to touch your portfolio for at least 7 years. This is Motley Fool's recommendation because, like I said, it could take that long, and it's not for the faint of heart. There could be a lot of volatility in play. And the third one is you're not planning to check your portfolio obsessively because, it's going to be not good for your heart. There could be a lot of volatility. If those three things are in place, you could certainly step into the waters if you want. Some people are going to go big or go home. And if you've got the wherewithal and maybe you're young or you've got plenty of extra and you want to take a flyer, that's one thing. I think for most people, that's not the case, not for their long-term future. And that's what we're going to talk about next is I've got a great article here. It's actually a white paper. It's entitled Longer Run Economic Consequences of Pandemics. And this was written and put together by the Federal Reserve Bank of San Francisco. So this is and I've got some contacts there I know personally. I've met and talked to some good folks there. And my point is, this is a very interesting white paper that talks about how pandemics affect economies and markets and all those kinds of things. It's a 17-page white paper. So if you want to read it, go to our website, yourpersonalbank.com. We'll have the link for you there. You can download it, pass it on to others for those that really want to dive in. I'm going to give you a quick summary. We'll also have that on the website. And basically, the quick summary is pretty simple. Is pandemics, unlike wars, tend to affect the economy longer term in a negative way in terms of growth, lower than expected growth with markets and things like that. Wars are different than pandemics. So, and they said in their article and in the white paper, they even talked about where, and they went all the way back to pandemics, all the way back to the 14th century. So they went over, there was 15 major pandemics where over 100,000 people died. This is a very intensive and extensive article. And as I put it, it's really impactful in terms of the macroeconomics and the growth and things like that. In other words, based on this article, the bottom line is they're not expecting the next decade in the markets to be anything like similar to the past decade. We had an historically long bull market, a tremendous bull market, particularly in the stock market. but in other markets, real estate too, and some others. And their article and what they're stating here is basically probably not best not to expect similar type of thing the next decade or so. Now, again, will that be true? Well, we're going to find out, aren't we? We're going to live it. In the meantime, again, I think caution is the word. Having some monies not overly focused on the growth side because, again, according to the economic research done by the Federal Reserve, that may not be the best solution. Having some funds, some assets, some growth, and some more consistent, steady eddy, that is going to make or be a bigger portion or a bigger, more key, more important of your long-term financial future growth and goals. And the thing is, that's what we're looking for. Most of us are looking for something to grow and give us some results, so we can supplement retirement. Ultimately, there's other things, college funding and business funding and short-term emergencies and very opportunities as they present themselves. Again, I haven't spent a lot of time on what the personal bank does. I'm going to encourage you to go back to some of the previous shows, yourpersonalbank.com. You can listen to any of the previous shows where I really go into depth in terms of how the personal bank works. But just a quick overview, a lot of folks can use it or consider it as a bond alternative. And it really, because it has consistent growth, it has a 4% guaranteed interest crediting rate currently paying 5%. Tax favored, you get tax deferred growth. You can access funds through policy loans, income tax free if done properly. And it has a death benefit associated that can be passed on to heirs on a tax favored basis. There are a significant number of benefits involved. There's a living benefits called Care for Life, where if you end up with some medical situations, long-term care type scenarios, funds are then available to be paid to you as an advance on your death benefit. Again, I don't wish this on anyone, but if those kind of medical situations occur, in many cases, funds are needed, and this can give you a great source of those funds. This is built into these type of things. Also, it's a tool that can be self-funding in terms of the death benefit. What I mean by that is simple. If you're funding an account for retirement or for college funding or whatever it may be, for starting a business or anything else, and you're doing it over a period of time to build that account, if something happens to you prematurely to not allow you to finish, whether it's, you're not here, you get disabled, the income source, your job or business has a setback or a failure, and you're not able to complete the funding of that retirement plan, college funding plan, or whatever that may be, particularly if you're not here, that death benefit portion can self-fund. In other words, the death benefit goes to the heirs, and it can make sure that college funding is taken care of, or that retirement for your loved ones, your spouse, whatever, is there, fully funded. So there's a lot of reasons, in addition to just the money and the growth of the money and returns and those types of things, the safety that's involved, the guarantees that are involved. There's a lot of reasons why a personal bank can make a lot of sense for a lot of folks. And I just want to finish kind of with this thought. I was talking to a client last week, literally, who was recommended to me from an attorney client of mine. And had looked into this, had been recommended by her friend. And she goes, wow, I had no idea that it could accomplish these other things. I was just looking at it as a way to put some money to grow over time, supplement retirement. I said, which of course it'll do. But showing her where she had the ability and access of funds without tax consequences in the short term, build funds for long-term growth, have monies available if a health scenario occurs with the living benefits, and of course taking care of loved ones when she's gone, even if it happened prematurely. She goes, those are important factors. I said, you're absolutely correct. And again, it's more than just money and growth. There's other factors involved that make the personal bank, well, in my opinion, a rather unique tool, a financial tool that by most folks that I talk to either overlook or have, in many cases, never been introduced to or even considered. And my point, my goal here of this show is to educate, help people make good financial decisions for their future, trying to get you some of the most solid information I can to help you, particularly through interesting and difficult times like this, but of course all the time, and then present to you an option of something that, again, most of you have never even looked at or considered. And that's all I'm saying is take a look, consider this, because this can be a great short and long-term solution, and is for many, many of the folks that I work with. Obviously, they've chosen to do so. And I think if you contact us at yourpersonalbank.com, again, I'm educationally focused. I understand, and I know this from personal experience, that the more you understand how this financial tool works and how it can benefit you in your situation, again, it's not for everybody, but in the majority of cases, when I share that, folks make the decision that this makes sense for them. And so I'm not going to be pushy or anything else like that. My goal is to help you understand how this tool can fit into your overall portfolio and your overall financial plan moving forward, particularly, again, in times when I think the caution flag is wise, just like in a race, when there's been an accident. You know, we've had you could say it economically, we've had an accident. We've had a bad accident, and the caution flag is out. And to go all out right now is probably not safe. You can go, but proceed with caution. Have a healthy amount of caution, because there's, again, a lot of uncertainty, both in the short and the long term going forward. And certainly the possibility exists that things will be different than they were before all this happened. And my point is simple. I want you to have options, and I want you to ensure that your funds grow irregardless. Stay tuned to the Your Personal Bank show. We'll be on next Tuesday at noon on Money Radio, 1510 AM or 105.3 FM.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.